We have Mayor Cantor here, Minority Leader Gold, Councilor Winograd, Councilor Sweeney, Councilor Kerrigan, Councilor Fay, Councilor Williams, Councilor Blanks. Did I miss anybody on the screen? I think not. In person, we have Town Manager Hart, Finance Director Mr. Privatera, and we have Miss Newton here from Finance Department. We also have our Town Clerk here, and for anybody watching on YouTube, thank you to Jen Evans for helping us out this evening to get this meeting out to the public. And we have to take another break. We're having technical difficulties. Thanks everyone for their patience. We're going to try again. Hopefully we don't have the continued echo.
There's no echo anymore.
Okay, thank you.
No.
Oh, thank you.
Thank you. And we're just waiting for Jen. We're just waiting now for Jen to tell us that she's ready to broadcast over WHCI, and we can get started. And I do apologize, Deputy Mayor Davidoff.
No worries.
Deputy Mayor Davidoff, WHCI is all ready and set to go.
Oh, thank you. So we'll reconvene what we had started about 2 minutes ago, the Finance and Administration Committee meeting. There's one item on the agenda this evening. It's an adjustment to the fiscal year 2022 proposed budget. Before I ask the Manager and Finance Director to explain what the adjustment is from Monday evening, I'd like to thank all my colleagues for finding the time this evening to have this special meeting on such short notice. It's greatly appreciated. With that said, Mr. Hart.
Thank you, Deputy Mayor. Matt Hart, Town Manager. Good evening, everyone. Thank you for attending tonight's meeting. But before I begin, just a few introductory comments. Following our meeting earlier this week, I spoke with Mayor Cantor, and she had asked me to see if there would be some options to reduce the tax increase somewhat further, just given it's always a goal of ours, always an objective of ours, is to try to balance, the need to provide our programs and services versus the mill rate, the impact on the taxpayer. So tonight I am presenting the council with an option to lower the mill rate increase to a little under 1.5%. So hopefully all councilors received the handout that I emailed to them and is posted on board docs if you'd like to access it there. And I'll just move through these slides rather quickly and then turn back to you, Mr. Chairman, for Q&A. So the first slide, I did provide a summary of the budget I had proposed back in March, just for your reference. And you see the revenues over the expenditures, and we had presented a proposed budget, as you will recall, with a 2.79% increase in expenditures. Slide number 3 is the mill rate calculation that I had presented as part of that proposed budget. Again, this was back on March 9th. And as you see here, what I had proposed, and this was before we were able to incorporate any rescue plan monies, had proposed a mill rate of 43.16 mils, representing a tax increase of 3.25%. So just providing that to you as a reference point. Moving on to slide number 4. Slide number 4 reads fiscal year 2021. We discussed this in some detail a couple of nights ago, and this would be our proposal to transfer in approximately $1.3 million in rescue plan funds into the general fund for fiscal year 21. And this would enable us to balance the current year's budget and avoid the use of fund balance as we had planned. And we did spend some time discussing that a few nights ago, and Mr. Privatere and I would be happy to take any questions if we need to discuss that further. Moving on to the next slide, which is where I would like to spend the bulk of our time tonight. And this, I believe, is slide number 5, page 5, fiscal year 2022. So here are the proposed changes to my budget that we would like the council to consider. First, looking at the top left hand of the page, we would incorporate additional state revenues, as we discussed a few nights ago. The additional $365,000 in education cost sharing grant, a little bit more money in the payment in lieu of taxes, and then we would increase the contribution or the allocation from rescue plan monies to approximately $4.1 million. You would appropriate $4.1 million as a revenue under this scenario. So all of those things combined would lead to an additional $4.5 million in revenue for the general fund. Looking at the lower right-hand side of the page, we have made a few changes from what we discussed on Monday evening. In particular, recall the positions that we are proposing to restore or add on. An example would be the social worker, the civil engineer 2, the property appraiser 3, the equity officer. We would adjust the start date from July 1 to October 1st for those positions. So that would result in 3 months of salary savings. We think that this plan makes sense because we would need to conduct a competitive recruitment for just about all of these positions, and that normally takes a little bit of time. So chances are we would not have someone on board until roughly October 1st. So hopefully you can follow all of those changes there. The additional contribution for fire department overtime we have kept in at $500,000. The additional money for recreational program at $175,000, that remains unchanged. We would still plan to eliminate the general fund contribution to Cnre, the $485,000 there. And then all of the staff positions, as I just discussed, we would move the start date to October 1st. Moving on to slide number 6, and I'm almost finished here. I did keep in the slide we shared on Monday evening regarding fire department overtime. And this is just to again demonstrate the point, or demonstrate the need to increase that line somewhat so that we are closer to our historical average in terms of spending. The next slide is a summary. I am on slide 7 now, and it reads fiscal year 2022 general fund town council amended. This is representation. This would incorporate the amendments we just discussed. And you see here, revenues and expenditures would increase by 2.73%, 2.73% overall, as opposed to 2.79%. And the budget would increase from roughly $300 million to approximately $308.4 million. The next page is the mill rate calculation. I am now on slide 8. So if you were to incorporate these changes, we are recommending a combined mill rate, and the increase would be 1.48%, 1.48% over the current year. Now recall that we did not see a mill rate increase for the current year, so actually this would be a tax increase of a little less than 1.5% over a 2-year period. Moving on to the next slide, this shows the CNRE budget adjustments as well as our use of rescue plan monies. Now, on the CNRE budget adjustments, this does represent a change from what you saw on Monday evening. You'll recall on Monday evening, we were proposing to fund the entire body camera project in year 1 at $1.2 million. The reason we were doing that is because we had hoped to receive a state grant to offset roughly 30% of the cost. We have subsequently received additional news that that state reimbursement is much less than what we had contemplated. It would only be 30% on the hardware. The bulk of this project relates to storage, not hardware, for the body cameras. So we are proposing instead that we revert back to the 3-year plan, that we would fund this project over a 3-year period. So what you are seeing here, instead of $1.2 million, would be $350,000, the first installment for this project. We would still plan to proceed with the project on schedule, but we would fund it over a 3-year period, as we had additionally recommended when we presented my proposed budget. And then down on the bottom half of slide number 9, you would see the use of the rescue plan grant funds, and again, they're a little over $25 million for the town in fiscal year 21. Actually, I had forgotten about the $170,000. In fiscal year 21, we would be utilizing $1.5 million, and we are proposing in fiscal year 22 to use approximately $4.1 million. That would be a total of approximately $5.6, and we would have a remaining balance of approximately $19.3 million for the council to appropriate at a future point. And then the final slide I have included, or we have included, this demonstrates the impact of the proposed tax increase on our average homeowner. Again, this is an exercise we complete each and every year, and this is the average single-family home assessed at approximately $228,000. This hypothetical homeowner has 2 vehicles assessed at approximately $10,800 each. Under this scenario, this homeowner would see a tax increase of $155. The mill rate would increase from 41.8 mils to 42.42 mils, a difference of 0.62 mils. That completes a quick review of the slides. Deputy Mayor, Mr. Chairman, we can now pause for any questions you or your colleagues may have.
Thank you, Mr. Hart. Does anyone have any questions of Mr. Hart or Mr. Privatera with respect to the changes that were just outlined by the town manager? Mr. Williams.
I wanted to share and get your thoughts on my thoughts, if that's possible. So, to me, over the last year, as we all know, many people were furloughed, laid off, took a pay cut because of the pandemic. And we have all this federal money, which I understand there's some logistical issues with the pension obligation bond going out, and how we want to look to that end with the use of this federal money. But I also know that the vast majority of the federal funds we're reserving for the out years. I think we have 3 more fiscal years that we can use them, and I believe that's right. So we're using approximately 5, a little bit more, leaving approximately 20 for those 3 years, as I understand it. And in the meantime, we're also adding positions through this budget, both I believe on the Board of Ed side and then on our side as well. So I'm just concerned that the budget maybe outpaces the public in terms of the ability to keep up with it. And I know we've had hearings, and I've heard from some of my colleagues that we haven't had to speak at the hearings. I get that, but I also wonder if the forum that we've been dealing with the virtue have had an impact on that. Maybe not. It's all anecdotal. But is there a way this budget we could get to a zero, by not adding positions and perhaps increasing the federal money use? And if not, if that's, and it's clearly not what you're recommending, why is that? And that's my thoughts. Thank you, Mr. Hart. Thank you, Mr. Deputy Mayor.
Thank you, Mr. Williams. Mr. Hart.
Thank you, Deputy Mayor Matt Hart, Town Manager. I'll start off, and then I'll ask Mr. Privatera to elaborate. So with respect to the use or the incorporation of rescue plan monies into the general fund for next year, I think we've calculated a max revenue loss of approximately 8.2 million, I believe. 8.2 million. So we could not, under any circumstance that we see, use more than that sum. And recall, we're recommending approximately 5.4 million now. And we're concerned that if we increase above that amount, we run the risk of creating a structural deficit. Maybe not so much in fiscal year 23, but perhaps more so in fiscal year 24 or 25. So we have to be judicious in terms of how we incorporate those monies. We could not bring in more than that amount that we've calculated as a general fund revenue for FY22. And then secondly, in response to Councilor Williams' question, if we wanted to get to a 0% or no tax increase whatsoever, we would have to go beyond that. And we would have to look at more significant cuts to programs and services, either on both the Board of Education, the school district, and the town, and that would be a significant dollar amount. I'll ask Mr. Privatera to elaborate on what that would entail.
Thank you, Pete Privatera, Finance Director. If we start off by looking at what would a 0% tax increase be, we would have to apply, number one, the Board of Education budget cut of about $750,000 to that, and then the additional non-tax revenue from the state of about $365,000, and then we'd be looking at additional adjustments of roughly $7.5 million. So we would have to go almost 3.4 million beyond what we have right now to get to a zero. With respect to the 4.1 million in federal ERA money that we're counting on, if you recall the last time I explained, and the mayor raised this as well, that when I report back to the rating agencies next week, they're going to want to know how much money we're using, and they're going to want to know if that creates a structural deficit in terms of a one-time revenue loss. So my response to them is going to be, if we did not issue pension obligation bonds, our annual pension payment would go up to $29.1 million. Based on our recent calculations, between the pension payment and the annually determined employer contribution, we're looking at about $25.5 million. So there's a significant cost avoidance of $3.6 million right there. Not to mention, our expectation is that we're going to have some significant savings by moving all of the non-public safety employees over to the state partnership plan starting July 1st. So I can explain what our plan is for the next few years, to offset that roughly 4.1 million. But to go beyond that, I'd have some difficulties. So I think we're all set to defend this as it stands right now. Thank you.
Thank you, Mr. Privateer. Anything further, Mr. Williams?
Yes, Mr. Deputy Mayor. So Matt, what I'm hearing is essentially that we could use up to 8.2 of the federal funds. And that would get us close to the whole increase in expenditures, except for probably $400,000. But just so I'm clear, the reason we're not doing that is because, well, and Peter, I'm not the financial person you are. Can you explain to me why that would be adverse to the pension obligation bond system if we were to use, 8.2, the number Mr. Hart articulated, which would essentially get us the entire increase for this budget? Why that's a problem? I'm not exactly following you, sir.
Thank you, Mr. Williams.
One year, we'd have a significant revenue hole in our budget. And they would want to know, are we willing to raise taxes to cover that? And I think that, I think I can say that, one of our priorities is to keep taxes as low as possible. Yes, if you applied the entire $8 million, then sure, you can have a no tax increase. But what happens the following year when your budget goes up, your structural costs go up anyways, your insurances, your payroll obligations, plus you have to make up an additional $4 million of revenue loss. That's when, that's when some hard decisions have to be made. So I think we're prepared to deal with that in fiscal year next year and the following fiscal year. And I think part of the recommendation with the remaining Rescue Act money, that remaining from the 8.2 million, I think at some point after the budget's adopted, we're going to have a conversation about how we can apply that to CRE type expenses or other types of programs that would benefit the community, along with any other areas of capital improvements. So I guess the bottom line, Councilman, is that we would be creating a revenue hole that we'd have a very difficult time digging ourselves out of.
Thank you, Mr. Privateer. Mr. Williams, anything further? Any follow-ups to that?
Yeah, I guess just from my position, even if we did the 8 million, you'd still have 16 or 17 million left in the ARA funding. And to help sort of level things off in the out years, but also we're adding positions, so not only are we worried about increasing the revenue in the next couple of years, and creating structural deficits, but we're actually increasing what could be a structural deficit by adding positions. And then we have kind of baked into the cake some of the issues that we're trying to deal with, like the fire department. And everyone knows some of the issues that I'm concerned about with the fire department, and they've done a great job the last year. I'm not contesting that, but we all know that the way it's currently set up, and Chief Brees does a great job, but the overtime is out of control. There's something wrong with the way it's structured, which is why we're going to address Fitch. And I wonder if maybe approach to think about is, we get to a zero, and then we don't exacerbate the structural deficits by adding new positions both on the board and the town side. And then we deal at the same time in the next few years with some of the structural issues that we see, which would be things like the fire department, or even on the education side where we have the declining enrollment but the exponential budget side. It's just the thought I'm working with here, and I want to express that to you tonight because it's something I've been thinking about. So thank you to the administration and to you, Mr. Deputy Mayor.
Ms. Fay?
To choose to take off your mask, but things are starting to open up, but a lot of people are really, really hurting. The food lines are long at the pantries, etc. So as much as we can go back and do our best to sharpen our pencils, I think that's the right thing to do considering the times that we are in. So my question, I was looking at the fringe and the insurance line, which is a big line, and it went up 2.5 million or 6%, but then Matt, you took another swing and brought it down a little bit. So I was just wondering, are we reflecting the benefits from going to the partners plan, the state partners plan, which was supposed to save us a lot of money on the health insurance side and be self-insured, stop loss? So I was wondering if that was in there. And then my second question, or it's probably more of a comment, is that with the decreasing interest rates and the interest rate environment that we've been in for a long time, and inflation and things like that, we're going to be in a low rate environment probably for quite some time. What kind of impact, Peter, do you foresee on the discount rate for the pension fund? And how much do you think, in addition to the bonds of $300+ million, how much do you think we can see of having to put in to keep the plan funded? Do you have a ballpark estimate for that?
Thank you, Ms. Fay. Mr. Hart, or Mr. Privatera?
Thank you. The interest rate environment actually has ticked up slightly since, since a couple of months ago, but we're still looking at a true interest cost of about 2.65% on the bonds, and those are taxable bonds. Based on that, I still think that between our debt service and our annual ARC payment or ADEC payment, we're still going to be looking at, roughly $25.5 million. So that's part of the savings that I'm expecting when we compare against what we would have to budget if we did not issue the pension obligation bonds. So I think we're still in a favorable interest rate market environment. We're getting ready to sell the bonds. We just we put an RFP out for underwriters, and we interviewed underwriting firms, and we're ready to go. I think we're trying to set up a meeting with the with the rating agencies next week, just as a cursory overview of any changes, and then we're going to sell the bonds probably by the second week of June and close the first week of July. So, next year, the money that we had budgeted, if you recall, the money we budgeted for our annual pension payment, the ADEC payment, once we sell the bonds, that's going to go into the reserve fund. And we were fortunate that we could reduce the par value of the bonds from $360 million to $324 million, and that was additional savings that we're generating. And all that money is going into the pension fund. So on July 1st, our pension fund will be 100% funded. So that's our hope, that's our plan, and pretty soon we'll be executing it.
Could you comment on the partnership plan, too? What we budgeted?
With respect to the partnership plan, the information and the budget data that we get comes from HR from Director Rick Ledwith. And I believe he gave us our estimates based on the expectation that we would go over to the partnership plan. So any short-term savings that we would have counted on, I believe, are already baked into our existing numbers.
And the increase was actually other insurances, right? Not
Yes, yes, yes. The increase was we have, I think, 6 categories of insurance, besides health, and we had some significant increases in other areas. And we also had an increase in our pension contribution, which we budget in our non-departmental area as well. So that contributed to that increase as well. Thank you.
Thank you, Mr. Privatore. Any follow-up questions, Ms. Fay?
Thank you very much.
Winograd.
So I'm looking at the latest figures, the PowerPoint, and I'm just trying to figure out. I don't have the one that you presented to us last in front of me, and I'm trying to figure out where are the significant changes. It looks like we're not doing. You mentioned spreading out the CRNE for the cameras. And so that's savings in the first year of what, $600,000, some amount there. Can you just point out the other? And you noted the ones in the sort of budget items. I have questions about that. About it went from, we had a $54,000 savings, and now it's up to 170. Are there other changes in here in terms of like use of the ARA funds? We're using more of them.
I can answer that, Councilman. Our budget presentation with respect to revenue for next fiscal year consisted of 2 parts. One was a contribution from the ARA fund of $2,225,000. A second was a transfer in from Cnre unreserved fund balance of $1,350,000. Subsequent to that meeting, I had a meeting with our external auditors, and we had planned on funding the Cnre request on the body cameras through the grant, and we were going to use Cnre fund balance as a revenue into the general fund. After having a conversation with them about it, they were uneasy about that transaction because they felt, well, if we had money in the Cnre account, we should use it for Cnre and not use it to offset general fund operations. And in retrospect, I agree with them. So we decided that we would increase the contribution from the ARA grant into the general fund. So at the end of the fiscal year, when the auditors come back, there wouldn't be any questions as to why we did it a certain way. Now, regarding the body cameras for the police department, we initially identified $1.2 million for these cameras, and we're going to pay for all of them up front in order to try to get a 30% reimbursement. I received some information recently from the police department on a proposal that they are looking at that they are inclined to go with. Now, when you purchase body cameras, my understanding is there's 2 ways to do this. Number one, you buy all the hardware, the cameras, you buy all the hardware to host all the data in your shop, which is a significant capital expense, which would qualify as a Cnre expense, and then you're paying for the software to run the data storage system. Or you can buy the cameras and you can contract with a company to provide data services where they would house all of the data in the cloud, and they would provide you with software, and they would give you access to all the data. So when an officer comes in, any information that's on his camera would be downloaded into the cloud, and this company would manage it. I asked about the 30% reimbursement. Now, the 30% reimbursement turned out to be roughly $84,600. And there was no indication that even if we spent $12 million, it would still be $84,600. So I talked to the town manager. I said, I think the best course of action for us to take is, since we're still waiting for federal guidance on the use of ERA money on capital-related requests, why don't we identify the first-year funding as $350,000 funded through Cnre fund balance, where we can go ahead and purchase the equipment and get the process started, and that'll give us enough time to get more guidance from the feds as to how we can spend the ERA money for the following 2 years. It didn't make sense to budget it all up front because there was no benefit of a reimbursement, plus the fact that there may be a possibility then in year 2 and 3 and so on, there may be some desire out there to come up with additional money to distribute to communities who are purchasing these cameras. So I think it puts us in a better position, to capture any future state grants if they're out there. But it didn't make sense at that point to fund the whole $12 million because there's no benefit from it at this point.
Mr. Hart.
Thank you, Matt Hart, Town Manager. So Peter, just to add to your response, there are 2 areas where we made the most significant changes, correct? One, we increased the use of rescue plan money, and secondly, we adjusted the start date for the positions from July 1st to October 1st, and then you modified the CNRE as you just discussed, but that really doesn't impact the general fund.
That's correct. It doesn't impact the general fund. The only other adjustment that we made was we increased the use of ERA money to get the mill rate down to 1.48. So that includes, that was included as well. So we increased the ERA grant money. I adjusted all of the positions with a start date of October 1st, and we adjusted the CNRE. We're not going with the 1.2 million funded from the grant. We're going with 350,000 funded from CNRE fund balance until such time as we have a better understanding of what the grant will and will not pay for the rest of the police body cameras. Thank you.
Thank you, Mr. Privatera. Anything further follow-up, Mr. Winograd?
Yeah. So, and I guess I should have prefaced this with the concern. And then I'll address the same point made before. I want to make sure we're not creating a structural hole. So, how much are we increasing the ARA? And again, I apologize for my frustration because I'm trying to pull up 3 different documents on my screen, and I can't juggle that much and look at all the various documents you've given us over the days. So I'm seeing this one for tonight, which shows the 1.5. That sounds like a familiar number for this year, and 4.1 million next year. So what were we shown last time? I just can't pull that up. What are we adding to the ARA usage for these 2 budget years?
If you recall, we were going to use $2,225,000 as a general fund contribution and 1.2 million as a CNRE grant funded contributions to purchase all of the body cameras. That's what we originally proposed. Now what we're proposing is the same $2,225,000 that we originally proposed. Instead of funding with CNRA fund balance, we're proposing to use the grant. That's $1,350,000, and the only real change is the addition of $560,000 more of the ERA grant money to get the mill rate down to 1.48%. Yeah, roughly
So we've
roughly
added
560,000.
So you're adding $565,000 in ARA money. And to pay for what specifically, and are we creating a $500,000 gap now? I mean, and I understand. And so that's my first question. And I have a question about the delayed new positions. So $500,000 I understand the purpose, but why is that responsible? And adding $3 million or more to it, to Chris's point, to eliminate the tax, I think legitimately, concerned about, but can you explain why this particular amount isn't a problem for creating the structural deficit?
I mean, as I explained, from my perspective, we're going to see some significant savings related to the debt service payments on the pension obligation bonds and the pension liability. So we're going to see savings every year moving forward. So that's going to be an offset. I think that we're in a position that we can smooth in, if we feel that we need to, we can smooth in some additional ARA money in year 2. So by the time we get to year 3, there won't be a structural deficit. There won't be a hole in the revenue. We'll have covered it one way or another. I think that whatever estimates were given to us on the partnership plan savings, I think they were very conservative. I know the Board of Education, their first year alone, they saved $2 million on the retiree health insurance alone. So I'm optimistic that we can cover it. We can cover that deficit, with this contribution. And if council chooses not to include the $560,000 that we added, then basically the tax increase goes back up to 1.75%. So, it was a combination of trying to get the tax increase down to a responsible level, but being prepared to deal with that structural hole down the road. I think that's what our attempt was.
Thank you. And just one additional thing. So on there was some discussion about the need for the additional positions, and certainly I understand that getting in hired in by July 1st is difficult. Would passing this budget prevent you from bringing in these extra positions earlier if you find somebody? Since October, I mean, it is a bit of a delay, and I think there is a need for these positions for all of them. So, I mean, are we? I think to Mary's point last time, and we're talking about pretty small amounts in the scheme of things, and if it's preventing us from hiring somebody who you feel is needed, I'm a little concerned about that. Again, I agree with you. July 1 seems a little bit quick, but I wouldn't want to shortchange the town for what really are some pretty small amounts in the scheme of things. And sort of on the larger point, I mean, listen, we're getting out of it, but we're in crisis, and in crisis, people need responsible government that is operating on all cylinders. We're needed more than ever right now. And I certainly don't want to, sort of run short of what you need to run the town effectively. So, is it possible that we could get somebody in before October for some of these? And if so, is there room in the budget to do so?
Matt Hart, Town Manager. Thank you for your question, Councilor Winograd, and I appreciate your concern. And yes, we would have some discretion. The budget is a spending plan. For example, if we were able to hire a social worker or in the August or September timeframe, we would do that, and we would adjust the budget accordingly. But in terms of planning and thinking of the time we would need to conduct a recruitment, we thought starting in the second quarter of the fiscal year would be safe, understanding that we have discretion. We could start someone earlier if needed. by adjusting the budget elsewhere.
Thank you, Mr. Hart. Any follow-up, Mr. Winograd?
No, thank you very much. That's all.
Further, Mr. Gold?
Grad and Councilor Fay, when we're talking about, I guess, insignificant numbers, as you mentioned, you know, I think we have to take a look at every dollar, make sure that every dollar is justified in the budget as we go forward. And when you're adding these positions, it's, while we say it's insignificant numbers now, it's numbers that go on in perpetuity, and it's $250,000, $300,000 plus that adds up year after year. So while I appreciate your comments, it is a significant number as we progress year to year rather than just this year. So I think we have to look at, as I applaud Peter and Mr. Hart and Peter Privatera and Mr. Hart and their diligence in putting together this budget, you know, it's something that we have to look at in blocks of time rather than year to year and see how we proceed and go. To Mr. Williams' point about you know, using the ARA funds appropriately. So thank you.
Any additional questions or comments from any other colleagues? Ms. Blanks?
Deputy Mayor, and I don't have a specific, well, maybe I do just have one specific question. Before I ask my question, I do just want to thank Mr. Hart and Mr. Privatera and the leadership for going back and looking at these adjustments and really working hard to see how we can bring those numbers down and be least, I guess, impactful to our town and the residents, recognizing the past year, almost and a half, that everybody has experienced, and everybody's really trying to recover after unexpected losses. So I just really wanted to put that out there and just thank you for your hard work. With all of the adjustments that you have gone back and made, I just want to clarify from our previous meeting to now, and I think, Mr. Hart, you had stated the average homeowner, I think at the $200,000 mark. I want to say at the last meeting, they were looking at maybe an extra, and correct me if I'm wrong, 182, and now we brought it down to about 141. Is that correct?
Mr. Hart?
Thank you, Matt Hart, Town Manager. Thank you, Councilor Blanks, for your question. So yes, comparing what we presented on Monday versus tonight. On Monday evening, we were talking about a mill rate increase of 1.75%. The increase on the real estate would have been $166, and then $8 on each of the cars. So that would lead to a total increase for that homeowner of $182. That's what we're talking about on Monday. This evening, by bringing the mill rate increase down to 1.48%, the taxes on the home would increase by $141. The taxes on the cars would increase by $7 each, so a total tax increase of $155. So looks like we've shaved off about $27.
Thank you, Mr. Hart. Ms. Blanks, anything further as a follow-up?
No, I'm all set. Thank you, Mr. Hart and Mr. Deputy Mayor.
Thank you. Wish to ask a question or have a comment? Hearing none, seeing none. Sorry. Madam Mayor.
Just wanted to, for Mr. Hart, I think it's important for us to highlight for the public, if anyone wants to watch this, what positions you held open, and what positions you did not fill, because even though you are filling some, there are others that you've held open, right? So if you could maybe explain that a little bit so people understand that's not just add.
Thank you, Madam Mayor. Mr. Hart.
Thank you, Matt Hart, Town Manager. Thank you for the question. Mayor. And I'll ask Ms. Newton if she has a list handy. But under my proposed budget, I had recommended that we leave 13 positions vacant. And if we were to either restore or add some as recommended tonight, I am counting 6. That would still leave a net of 7. Those positions were in public safety primarily, as well as in other departments across the organization. Either one of you have the list handy?
Pete Privatera, I don't have the list in front of me, but I do know that we had 5 public safety positions that we're holding open. We had 3 police officers and 2 firefighter paramedics. We had a crew chief in Public Works that we did not fund, and there was a part-time plumber that we did not fund as well. You know, those represent the bulk of the positions that we chose not to fund. Thank you.
Any follow-up, Madam Mayor?
Thank you.
Thank you, Madam Mayor. Anyone have any further questions or comments? Seeing or hearing none. I'll just say that since Monday, Mayor Cantor and myself, along with the manager and the finance director, spent some time working on reducing the increase from 1.75% to 1.48%, and explored a lot of different alternatives and options to get us there. There were other things that we did consider, but our main concern was it really was not a viable option if it was going to create a gap in the following year's budget. We've always been very cognizant of not having one-time uses, so that the following year is not worse than it could be. So I think that's important to note for the record. Those discussions took place in the last 48 hours to get us where we are. So I'm appreciative of the time and the resources that our town staff committed to supplying us with the information and getting answers to some assumptions that, as has been pointed out, were not correct, and talk to our auditors and others with respect to whether or not the financial advice made sense. And I think a key point that I think that we can't lose sight of is the fact that we will very shortly, in due course, go out for funding, or go out for issuing bonds for our pension obligation. So we're going to be having discussions with rating agencies who are going to wonder how we put together this year's fiscal budget for next year. And they are very in tune as to how money gets moved around within budgets, because they basically primarily work in scenarios like this. So we do have to be cognizant of that and do our due diligence and make certain that we're operating on a course of action that makes sense. That's all I have. Seeing that there's no further business to come before the committee, I just want to remind everyone that we will be voting on the budget resolutions on Tuesday, May 25th. And if anyone has any further adjustments or suggestions to this year's budget as currently presented at the 1.48% 0.48% increase, I would suggest that you contact the manager and the finance director, as well as Mayor Cantor. And if you want to talk to me, I'll be more than willing to talk to you as well. But I think that's important. West Hartford has a very long history of not accepting or doing last-minute budget adjustments at the table. It's very confusing when that does happen. I think it happened one time in the 14 years I've sat here, and it was not a good night. So if you really have something significant that you think that we could do, please do it earlier than later. That's all I respectfully request. I think that's the best use of staff time and avoids confusion for all of us as colleagues. So with that said, thank you for all joining here this evening, and I'll entertain a motion to adjourn. Okay. Thank you. Second? Second. Thank you. Moved and seconded. All in favor?
Aye.
Okay, we're adjourned. Thank you for your time. Have a good evening.